Did you know that you can use options to invest as a long-term investor? Many people get on the internet and talk about options as a way to make quick, fast money. But by using patience, you can use options to become a long-term investor. Good morning, everybody. This is the Sunday Finance Church. My name is Jimmy, one-third of the Black Wealth Rebels. I am joined by my brothers, Kamari and Corey. How are you gentlemen doing?
Morning, good morning, good morning.
You know what I'm saying? Let's get a Kamari. That is what you call a hook, beloved. You see what I'm saying? That's how you do it. No, don't hate. That is called talent right there, man.
Listen. I want you to be clear. You weren't even thinking about hooks.
That
I was
was
doing hooks, sir.
That's not true. That's not true.
I raised you, son.
That's not true. That's not true at all.
No, we're not gonna have a Skype today, man. We in and out, baby.
We don't need no hooks. That's what she said. All right. With that being said, good morning, everybody. Today we are going to talk about leaps. This is our Sunday show. We come on, have fun, and we do a little class about something. You know what I mean? Corey is out in the wilderness right now, but it's all good though. We still here though. How y'all gentlemen doing though, man? How would y'all feel about yesterday's class? For those who don't know, Saturday was camp.
Listen, Saturday was amazing. It's always amazing now. Listen, I'm tired. I got 1,000,001 things going on, but the one thing I delight in doing every week is showing up with the babies.
Yeah.
Honestly, I ain't even really doing nothing. Y'all doing all the work. I'm just with the energy. I just like being in the energy, being in the atmosphere.
So what do you think about that?
I mean, it was a little different for me because I'm used to being the primary person doing the teaching. So it's a little weird, but it was fun to see it from the other perspectives and see how everything was moving around. Plus,
I was telling Kamari, I watched last year, and I watched the last couple of years. Just doing some game tape. The real estate week I always do. It's always like a reversal, but usually it's online. So
yeah,
this is the first time in person that I got the gun. You know what I'm saying? Got my
Yeah, it was a little weird seeing somebody else teach for the majority of the class because again, this is something that we've been doing for years, and when we were doing it in person before, we didn't have a specific real estate week when we were doing it in person. So it was weird, but it was fun. Like it was a great experience because I get to see Jimmy cook when we in the community, but in our summer camp, I've never seen it, never seen him with the rock, and he was running with that joint. Like Jimmy was going crazy.
I was in my bag, and also I want to give Kamari a shout out, believe it or not.
Oh God. Let me brace myself.
Listen. Listen. Take yourself from the stage. I'm gonna tell you why, right? Because first of all, I've been in my teaching prime right now. I'm going crazy at every because I've been doing a lot of teaching lately. Specifically adult classes and whatnot. But what you allowed me to do yesterday, Kamari went and got some technology. So when we do our stream, we can stream, without me having to sit behind the computer. So I was able to get in my element and then walk around and, and do my thing. You know what I'm saying? Like, so, I got a chance to do a full performance because Kamari has technology. So I'm giving you props right now.
So cool. But remember, I wanted that for Corey because he is the teacher here. So we will have that.
I'm not denying that.
Have that for Corey. We will have that for Corey.
Listen, Corey gonna have it next week. I mean, next week.
But no. I was thinking of, and not to belabor this. This is actually inside baseball. We're going to need to set up the room differently to do that better.
Okay. Yeah, that's true. Yeah. Probably put it on the other side or something.
Yep.
I thought about that. But also next week we're going to do a little bit of Bitcoin and some review. So next week will be, interesting as well because I get to get some bars off because, those are my two things. I just want to get bars off on is Bitcoin and real estate. With that being said, though, family, I see some folks are live in the building. We got a number of people watching live. If you are here live, please go to the comment section. Let us know you're here. Hit the like button, hit the love button.
Don's here, Miss Maui's here, Lorraine, and Nicole is in the building.
Hey, listen, man, all those folks have supported our camp in numerous ways, and I want to say thank you to them again because, again, I was telling Liz this yesterday. Shout out to Liz. Liz came and spoke to the babies.
Well, hold on. Shout out to Liz. Yeah. Shout out to Rep Parker.
Shout out to
Miss Kim. And shout out to Camille. All of them have been supporters of us, and we appreciate and love you all tremendously.
Absolutely. Listen, so Liz got to speak to the babies yesterday about being a mortgage broker, and a couple of them they said that's what they want to do. We had a legislator in the building. We had a state rep Parker pulled up and talked to the kids about legislation. Miss Kim talked about becoming a multimillionaire through real estate, as did Camille. And
we had millionaires in the building.
Yeah. Plus, Kamari's one too. So, but also we had our sister came down from Baltimore, or should I say came up from Baltimore and supported us. And we got to shoot some content with her as well. Like we had a lot going on yesterday and it was fire. So with that being said though, let's jump into what we're going to talk about this morning. Man, y'all ready for this, man?
Yes, sir.
Y'all ready for this?
I'm saying I got my lime green Phillies hat on for the day, man. So let me let's get into this, man. Look at you. I got it.
I just told you I'm running I want the sticks, man. I got it. I just told you that.
I know, but that didn't I thought you talk about the
all of it, the back end, baby. Come on. I need you to comply.
Listen, man, are you trafficking and tricking, man? I mean, somebody got to show me the difference. Somebody got to show me the difference, man. That's all I'm saying, man. All right, listen. This morning we are talking about leaps. I titled this "Leveraging Patience" because to me, I think this is important in terms of being an investor in the options game. Is one way is to have patience, right? And it's called "How Long-Term Options Can Build Wealth." That is what I'm calling today's presentation. So this is a comprehensive guide on LEAPs, which are long-term equity anticipation securities. That is what LEAP stands for. It's an acronym. Long-term equity anticipation securities. So I'm going to explore how this investment vehicle can help you leverage patience and build significant wealth over time using strategic approaches that sophisticated investors employ. Now, I'm going to start this off by saying anything we say here is not investment advice. It's for educational and informational purposes only. We were just talking about some of the strategies that we employ in our personal lives and just, shooting the ish about it to talk about some of the pluses and minuses of doing so. LEAPs in terms of options personally is my number one way of getting in the options game. Now, for those in the village, you do know that sometimes, depending upon what the setup looks like, I'll get in there and trade SPY. And if those that are in the village realize I don't trade it as much anymore, I'm employing one strategy now where I'm looking for gap ups and gap downs and just looking to fill the gap. And sometimes that doesn't happen. So I'll be very patient. And one of the things getting into this conversation today is patience, right? Because patience is so important as an investor as well as a trader. And I say an investor and a trader because even if you're investing in hard shares or an ETF, what I see a lot of times is when there's any sort of pullback in the market, people freak out and sell out of their positions when you have to have patience. Everything we talk about is about building for the long term. This is not get rich quick scheme. This is not us telling you to run any play to make $1 gazillion within a short period of time. That's not why we're here. We're here talking about building something. We're talking about building, right? Building something that'll last over a lifetime and hopefully multiple lifetimes if you employ some of these strategies correctly, although we're not giving you advice and we are not your fiduciaries. I say all that to say this. People don't think about the fact that you can use options in that manner. Because a lot of times when you are online or you're on YouTube or you hear about the idea of trading stock options, people kind of present it as a way to make quick money. But what we're talking about is making this part of your overall building and your overall portfolio. Now, Kamari said he wanted to run the PowerPoint, then he's like taking me down on the way he's doing it.
You don't need to slide it. Keep going, man. Keep going.
You are overproducing. But anyway, I got it.
I was trying to get Corey back. That's what I was trying to do. Just keep going, man.
Respect. No, because I was getting ready to go to the next slide. Next thing I know, the slide ain't up there. You know what I'm saying? Anyway, with that being said, here's the introduction to LEAPs. What are LEAPs? Long-term equity anticipation securities are options contracts with expirations exceeding 1 year, right? Typically listed up to 2 to 3 years in the future. I want to repeat that. These are options contracts, right, that are typically exceed 1 year. So that's 1 year from when you purchase it. It's not anything that goes away within a month or it goes away within 2 or 3 months. This is at least a year out. So unlike standard options that expire within weeks or months, LEAPs allow investors to establish a long-term market position with a strategic mindset rather than a tactical one. So this is important to point out. But the thing about it is LEAPs give you the ability to make a nice amount of money over relatively a short period of time, you say 2 or 3 years, but also longer than a traditional options contract. So taking a step back, remember an options contract gives you the ability to control 100 shares of a company. And taking a further step back, when you buy stock in a company, and I've told you guys I'm going to say this every week, you are buying equity in that company. You are becoming an owner of a company. So now when you buy the option, you are controlling the right to own that company, but you're controlling 100 shares with one options contract. So when you think about LEAPs, it is a way to control for a year, or maybe 3 years, 100 shares of a company. It's a form of leverage. Instead of you having to buy 100 shares of a company, you are controlling that 100 shares for a period of time. This can be beneficial for a lot of reasons, right? Because this can allow you to scale in a way that you couldn't do by buying 100 shares. To buy 100, I just got out of a leap about a week and a half ago. I made like 5 bands, right? And some people, that's not a lot of money. But here's the thing, though. I look at everything the way I look at real estate, right? The average real estate in Philadelphia, in terms of a monthly cash flow, is anywhere between 150 to 250 bucks. That's what people out here cash flowing, no matter what they tell you on their gram. The data says 150 to 250. So the way I look at everything is, all right, so if I can put up a leap, right? I look at all my leaps as being almost like an investment property. So if I'm going to make, say, $200 a month on a rental property, right, after expenses, you're talking about what, $2,400 a year. So I'm like, if I can double that up, that's easy money. Now, to buy an investment property, it's going to cost a certain amount of money. The leap that I purchased, that I cashed out of, was like a Microsoft one. It cost me close to like 15 bands, but I made five grand in about, what was it, like 14, 15 months, right? So about a year, a little over a year. But you see the difference? I didn't have to
Stunt 101.
I didn't have, no, that's not a stunt. I'm just telling you, I'm giving real life examples for a reason. Because think about this though, right? I didn't have to deal with tenants, toilets, taxes. I didn't have to deal with any admin. I just literally no termites, any of those things. I didn't have to deal with any of that. Like right now, like when I get off here right now, I gotta go. One of my tenants locked themselves out. Now the thing is, they're in church right now, so shout out to them, for going to church. But that's something I got to deal with, right? I don't have to deal with any of that when it comes to my leaps. But it also gives me the ability to scale and actually make more money than a rental property. Well, some say, you're not getting the appreciation. Well, I'm going right back into opportunity presents itself. So I'm just flipping money. But leaps are powerful in that way if you understand the whole way to get into a leap, what you're looking for in a leap. And by the way, I'm not even getting paid for this. I already gave you guys the best book there is on leaps. I'll put the link to this in the comments shortly, but there's a whole book that gives you a strategy on leaps that I've been implementing for years now. So with that being said, though, let's talk about how they work, right? So leap call is to give the holder the right to buy 100 shares in underlying stock at the strike price before expiration. So a bullish strategy will be you profit when the stock rises above your strike price plus your premium paid. In order to buy a leap, you have to pay a premium, right? So, you pay a premium, but then you get that back. You have to, when you sell it back, if you're correct in the way you see the market going, you're going to get back everything you put up in terms of a premium plus a profit, right? Now, leap put is kind of just the opposite. It gives the holder the right to sell 100 shares of an underlying stock at the strike price before expiration. So this is more of a bearish strategy. When you profit when the stock falls significantly below your strike price minus the premium paid, right? So here's what I'll say about this. Personal experience again. 99% of the time when I'm running a leap, I am doing a call. That's a personal thing. The market overall, people say, well, the market has its ups and downs. It does, right? But if I chart out the market over the last 100 years, there'll be more ups than downs. Now, the thing about puts, which makes puts interesting, is they cash out a lot faster, right? You cash out crazy on a put. But I tend to be bullish overall when it comes to the market. That's just knowing myself. One of the things about being a trader and or an investor is you got to be self-aware. And shout out to the babies too, man, because I love the fact that they pick up on that, right? So we were having a conversation yesterday with the kids about different types of real estate investing. And one of the kids was like, look, I want to be in the REITs or he said he want to be in the, he said he wants to be in the REITs or doing some sort of flips. He was like, I'm not built to be a landlord. He was like, and I don't want to be a developer because you take on too much risk. I'm like, damn, these are the babies talking to us. But anyway, I digress. But what was impressive about that is he's already becoming self-aware, as a young man. Like, I know I don't want to deal with this. I'm okay with dealing with this risk. I think it's important as an investor and a trader to understand who you are, right? For some people, they don't want to deal with options at all. And that's cool. That's cool. You know who you are. For some people, they don't want to deal with individual stocks at all. They just want to buy mutual funds or ETFs. And guess what? That's cool. I don't I don't asset shame. Yes, people be out here asset shaming y'all. Don't asset shame. I think the fact is everybody should be investing. I'm only going to shame you if you're not investing at all. All right, then I got a problem with it because we all should be investing because we already participate in the system as well. So let's make some money from it. But with that being said, you got to understand when you're buying a leap that this is a long-term play. Now, I just gave you an example of something I cashed out on in under 2 years, right? It's because I was in profit so much that I wanted to take profit. I say that to say you don't necessarily have to wait the full 2 to 3 years if you have the desired result that you are looking for when you buy a leap. So if I buy a leap and I'm saying I want to make at minimum, say 50%, when I hit 50, 60%, it's okay if I cash out. Like no one's ever going to be mad at somebody making 50%. At least they shouldn't be, right? So the wrong way to look at it is, let's say I cash out at 50%. And a couple weeks later, I'm like, damn, I could have had 75, 80%, right? I don't get upset at that. I look at the fact that, I just walked away with 50%. Anywho, so why do investors use leaps? There's several advantages, right? It gives you long-term leverage because you gain exposure to stock upside without committing the full capital. So here's an example. It may cost me $5,000 to buy a stock position, but I can get that same control for $800. That's why I mean it's a kind of an ultimate leverage. It's also conviction trading. It's ideal for a long-term thesis play in the transformative sectors. So things such as AI, blockchain, electric vehicles, renewable energy. If these are some of the sectors that you think are going to be some of the best performing sectors over a long period of time, this will give you the opportunity to kind of like lever up in those sectors. A lot of people who were huge on NVIDIA, who believed in the thesis of NVIDIA, really came up with leaps over the last couple of years because of how NVIDIA's market value and market cap has risen. And they were levered up because they were using options instead of the hard shares. So it's defined risk and capital efficiency. So your maximum loss is limited to the premium that you paid, unlike margin, right? Another way that people try to lever up is by using margin. I am completely against margin. Right?
Margin is the devil.
Yes, I'm completely against margin, right? What's the old Charlie Munger quote? He said, there's 3 ways to go broke. It's the 3 L's. He said, you go broke by messing with the wrong lady, liquor, and leverage, right? So the wrong leverage, lady, or liquor will make you go broke, right? So anyway, but when you talk about a leap, the maximum you can lose is what you pay for the premium to control those shares. So it's kind of like a defined risk there. And if you're okay with losing that, then it is what it is, So this also keeps more capital available for diversification of emergency funds. Excuse me, guys, it's early. For me, it is at least. I was up late last night watching The Dark Knight. By the way, as an aside, this has nothing to do with leaps. I think that The Dark Knight Rises with Bane was better than the other ones, and I know Corey may want to argue that, but I digress. So there's a potential for outsized return when it comes to leaps. So Corey, you agree with that? All right, my man.
I think that's the best Batman movie, period.
I do too, dog. I watched it last night. I think it's the best ever. That has nothing to do with leaps, so I'm not trying to piss Kamari off. So I'm gonna get back on topic.
Nope, I ain't got nothing because I need to get out of here.
All right, so it's the potential for outsized returns when it comes to leaps. If your thesis proves correct, leaps can deliver returns of 200 to 500% or more when stocks make significant moves, right? So again, that goes back to the idea of, if you have a thesis on where you believe a specific company or market to go, that you can actually use the leaps to get better returns. So what are some disadvantages? That's right, because we got to talk about the disadvantages if you're going to talk about the advantages, right? There's illiquidity challenges. So if you have a wider bid-ask spread, that can make entries and exits costly. We talk about that all the time. So you have to look at that when you're going into, an actual contract. Some leaps have minimal trading volume, creating execution difficulties. Now, if you follow the strategies we talked about, some of those problems like you won't have because we're not going to be trading leaps on these random, these random companies in thermodynamics. And I see people build these crazy thermodynamic companies. It's like, dog, like no one's buying that. There's no volume there. That's not what we talk about. There's also a psychological factor. It requires significant patience through market volatility. And I think that right there is what's most important because, the psychology of money is a real thing. And you got to have patience when you're talking about leaps. I have a leap right now and I'm up about 25%. But at one point, I was down probably 40%. Transparency. It's on C3 AI. It's a AI software company. Ticker symbol is literally AI. not investment advice. Just telling you, who my reality is. So I got some leaps on that. I also have some leaps on Riot. Those leaps on Riot, I've been talking about them for years because I've been consistently buying leaps on Riot. It's a way to lever up and make some cash. As a Bitcoiner, I believe Bitcoin is going one way. And I was down significantly on those. Crazy part is I was up on those. The new president came in, did what he did. The market went like tanked down, and I lost a bunch of money. But I got 2027s. Didn't do anything. I got 2026s. I got 2026s and 27s. Didn't do anything. Now Bitcoin went up to close to 120. Now I'm back in the profit mode again. But that required patience, and also it required a belief in your thesis when you do your analysis in terms of getting into a specific contract. So short-term declines may tempt premature exits despite valid long-term thesis. One of the benefits of using a leap versus using a swing. Now, a swing is like, a shorter time frame. It's not a day trade. It may be 3 to 6 months on the swing. But one of the advantages of, using a leap, and shout out to our sister, Dr. Chaz, because she always talks about this. In fact, she has a T-shirt she sells. It says that I wasn't wrong. I was early, right? So sometimes you can have an analysis, but you could be, ahead of your time, or, I'm so far ahead of my time that my parents haven't met yet, but I digress. The fact is, leaps give you the opportunity to be right? It gives you more time. That theta decay that you see, and if you don't know what theta decay is, join the village. We have a full class on theta and theta decay. But that theta decay doesn't become as problematic till you get to about 100 days out. But remember, I'm buying multiple years, so I'm having 600 days out. You know what I mean? I got 600 days for this to be right. When I get to about 100 days is when I start to what do I want to do with this? Do I want to roll it? Do I want to sell it? But the idea is I give myself more time to be correct. I don't need my analysis or the way I see the market going to happen tomorrow or even next week or even next month or even in 3 months. I'm giving myself 2 years, right? I'm giving myself 2 years. So the fact of the matter is you are tying up capital for 2 years, but that's why this is not made for everybody. Leaps are only built for Cuban links. You got to be able to build up a little capital, right? Because some people say, well, because again, I always compare it to real estate. But if you're saving to buy an investment property, you want to put up 10, 15 bands anyway. So, take those same 10, 15 bands, get in the leap market, and now you're liquid and you can, do all kinds of other things. With that being said, there is no dividend income. If you have a company that pays a high dividend and you buy the 100 shares, you're going to be getting that income that comes from a dividend. There is no dividend income with Leap. So Leap holders forfeit dividend payment stock that owners receive. So this opportunity cost can be significant if you're dealing with a high yield stock. Now, I'm not going to go too deep into this now, but there is a way for you to make income off of a Leap, which is known as a poor man's cover call. Probably do a whole class on poor man's cover call because a poor man's cover call deserves its own class, because that is like, really going deep into this whole idea of using leaps to create income. But
yeah, I think we put that behind the village.
Yeah, we're gonna put the yeah. That's also only built for Cuban links, right? That's part of the Emperor's New Clothes. I'm barring you away right now. Come on, you have no idea.
I hear you.
I'm bodying you. Anyway, smart strategies you can use.
Get your chef on.
You can use leaps as a stock replacement. Deep in the money leap calls, instead of buying 100 shares, right, using 1 to 5 or 1/3 of your capital while maintaining a similar exposure. I just talked about the poor man cover call. You can own a leap plus a call or sell, plus a call short term against it to generate income, right? So it's going to give you the upside potential of having that leap, but also can kick you off income if income is the thing that you're looking for. So you can use a poor man's cover call to make me a couple $100 a month, right? Which is the same equivalent that you would, with a rental property. But at the same time, you still own the leap and you're anticipating the leap to go one way. So it's very powerful when you go deep into the idea of a poor man's cover call to combine with your leap. Also, you can use it as portfolio protection. You can put insurance against significant market downturns, protecting your broader portfolio. So if you have a large portfolio, if you have a small portfolio, if you got $600 in your Robinhood account, I'm not talking to you. And that's no disrespect, because again, you're starting, right? But if you got a couple $100,000, you know what I'm saying, maybe an M, or even 50,000, something like that, you may want to have some portfolio protection by using a leap to kind of like go the opposite of how your thesis is with your shares. Again,
well, I ain't got 100,000. I got a couple of leaps though. I'm long on oil. I'm doing that through XLE. So
there you go. There you go. Got some XLE.
2027. Oh.
Right now, the leaps I'm sitting on a Riot. I'm very transparent. AI and Riot. So if y'all see them pop, right? You know, and you see me stunting on your timeline, you know, with a tiger or a lion in the crib, you know my leaps done went off. But I digress. All right. So also with thematic investing, you can use leaps to gain leverage exposure to long-term secular trends, right? We talked about this: AI, clean energy, or semiconductor expansion. If you believe a sector is going to go a certain way, you can use leaps to lever up, right? So each strategy requires appropriate position sizing and careful strike selection based on your specific objectives and also your risk tolerance. Understanding your risk tolerance is key when it comes to using the strategy. So please understand that. So I'm not gonna spend too much time here, but how to pick the right leaps, right? So deep in the money, right? 70 plus deltas, 70% chance that this will finish in the money. If you have a 70 delta, 30% chance that it won't. Sometimes when I look for leaps, I go to an 80 delta. You know what I'm saying? I learned that from my guy Spoon. Shout out to my brother Spoon. He was like, man, look, go for an 80 delta. And I started doing that, and I've been more successful at doing that, right? So that gives you, a huge chance of being correct in which way you're seeing this going. And I definitely go deep in the money, right? And again, some of these strategies you talked about, the book I talked about. So if you're looking at a 50 delta, that's like a balanced risk reward is moderate leverage. Sometimes if you got the YOLO spirit, like my brother at the bottom of the screen got the YOLO spirit, you know what I'm saying? You might say, look, man, I'm going all the way down to a 30. It's the highest risk reward. So here's what I'll say about that. If you're right, you can make a lot of chicken. But the only issue with that is if you're wrong, so it's risk reward. But the great thing about this strategy is, right, your exposure is what it is. If I take 5 bands, the most I could lose is 5 bands, right? And obviously we don't want to lose. We want to protect the capital, right? So the expiration time frame, 12 months, you have lower premiums, less time for your thesis to play out. 18 months, it's also a balance of cost time. But now 24 plus months, it gives you maximum time, but it's going to cost you more. The more time you put on a leap, the more it's going to cost you. You're paying for time. I'm okay to pay for time. You know what I'm saying? Time is the most valuable asset. The 2 most valuable assets you have are your time and space, as noted in this classic piece of literature called Own Your Time and Space, which can be found at ownyourtimeandspace.com, but I digress. Liquidity factors, right? You want to check open interest. This is what we talked about earlier when we said if you use the strategies that we employ, you won't have the problems of illiquidity, right? Because we're only looking for things that have greater than 100 contracts and volume to ensure that you can exit when needed, right? And we're looking for close bid-ask spread. So that also is an indicator of having better liquidity. Close bid-ask with the number of contracts already being out there, you have no problem in getting out of this. So if you're dealing with like the major companies, Microsoft, Google, Tesla, NVIDIA, Apple, you're not going to have these issues. The issues come when you're trying to, find these rando companies that you saw someone mention on your timeline that you really haven't done your research on. So you probably shouldn't be doing it anyway. But
they got 5,000 in volume daily.
You know what I'm saying? You don't want that. You don't want that, right? So here's a quick example and case study. You don't have to go over this either, but the thesis is if you're big on AI, right, you can actually get more by buying the actual option than you could buying 100 shares of NVIDIA, right? Same with Apple. If you're big on Apple, by the way, I've been looking at some Apple leaps, by the way, because Apple has been, based on the thesis of AI, has been taking a beating. And that's the other thing, right?
How far out?
2 years, at least 2 years. But here's what I'm saying. Here's what I'm going to say, though. I'm going to make sure I point this out, too. When it comes to buying a leap, the best time to buy a leap is on a red day when you have a pullback, especially if you have a pullback that may be significant. 15, 20%. If you get a 15, 20%, people make millions doing this. There are people that just do nothing but save capital, put it in T-bills, save capital, put it in T-bills, save capital, put it in T-bills. You have a huge pullback in the market, and they lever up by buying leaps. And then when the market recovers, as is always done up until this point, they're caking up. That is a crazy way to make money. For instance, if you go back to the beginning of this year when our market fell down, that's when I got those Microsoft leaps. I was able, as a matter of fact, I got another Microsoft leap because the other ones I had before then. Other part about leaps, right? Sometimes when you cash out of leaps, you wait for a pullback to get back into the same leap. Another strategy, and Corey talked about this before. If you buy a leap, right? Let's say I buy a leap today. In a couple months, it looks like it's going against me. but I still believe in my thesis, I could then. There you go. Well, Kamari said buy more.
Sorry,
right?
I didn't
So
mean
I've
to
done
do
that as well. No, but it's true though. It's true though. So there's a number of strategies that we got to talk about. But the point I'm making is when you have a pullback or a red day, that is the best time to buy a leap, right? I was speaking about the Microsoft ones, right? Because Microsoft is something that I always look for a leap on, right? Going back to a couple years ago, me and Corey spent like a year trading nothing but Microsoft and Visa, right? Nothing but Microsoft and Visa. So Microsoft is something that I'm comfortable trading. So I just cashed out of a Microsoft leap, but I'm always going to have a Microsoft leap, right? Microsoft is a well-ran company, and I think that it's going to be one way. But I sell that to say this: when you have a pullback, if I see a huge pullback of Microsoft, I'm going to find a way to have capital to then jump into a leap, right? Because I just believe in what that company is doing. Another thing I want to bring up too is ETFs, right? You can buy a leap and SPY. You can buy a leap and SPY. Now, a leap and SPY is going to cost you a nice piece of chicken. As a matter of fact, let me see if I can tell you guys right now what a leap and SPY will cost. What do you think a leap and SPY will cost, Corey?
Probably, for a year. For a year, talking probably about 40. You talking about 40, 50 racks.
Let's see what it is. Let's see if is that high, right? So I'm looking at SPY now. All right, and let's see. Man, SPY is at 637. You guys, SPY was almost $100 like lower just a couple months ago. So man, if you would have had a leap already. All right,
so now Microsoft is at like 5 something too, so it ain't that far off.
Yeah, but here's the thing though, right? So right now, the furthest out you can buy a SPY option is December of 2027, right? So if I buy one at the money, right? So right now SPY is 637. So let's say I want to buy a 635 SPY call all the way out to 1227. That would cost me it's not that bad, Corey. It's like about 10 bands, like 9,700, like 10 bands.
Come on, man. I need you to create a food stamp list. I can't afford none of these joints, man.
All right. Great point, right? Great point, right? So the question is, can you find something that'll move the same that won't cost as much? And you can. All you have to do now is go pull up your charts. You pull up SPY, look at SPY over, a year's time frame, and you compare it to other companies that you think may move like that. I know a couple years ago, I can't say this now, but we did the analysis a couple years ago, and there were a couple companies that almost moved similar to SPY. Tesla was one at the time, and also was Ford, believe it or not, Ford Motor Company, right? When you overlaid Ford with SPY, now again, it could change because, Ford be going through some stuff, but it was kind of a way to get into a SPY play by using a proxy, So again, find a proxy.
Listen, the most amount of money I made in the market was in leaps, and it was a Ford leap. Shout out to our brother Malik Carter.
There you go.
Yeah, me, you and Malik did it all at the same time. Yeah, I did that challenge with y'all. We did Ford. We did Ford leaps because we was calling Kamari a cheapskate, and so we bought
Nah, what happened was I started buying Ford at 4, then it went to 8. So, make some money off that. But then y'all was like, Malik specifically was like, look at the leaps.
Yeah, because again, that goes
5 cents a joint.
That goes into this conversation, right? If you feel it's going one way, the leaps will lever you up so you can make more money than you can with the hard shares, right? So I remember you guys did that. I didn't participate in that with y'all because I'm in my neighborhood, we call Ford. I got Ford trauma.
Oh man, I don't.
Ford's
been good to me. Ford's been good to me.
Hey, listen, me, Jimmy, and Spoon did SoFi.
Yeah, we did SoFi.
We did SoFi leaps.
Yep, SoFi cashed out on them SoFi leaps like crazy. But anyway, I said to say this though. When you start, right, you want to begin with thorough company analysis. Everything we talk about here, you still have to do your analysis. You got to do your due diligence, right? You got to do your due diligence. Position sizing. So take this how you want to take it. I say that you should have limit each leap position to 3 to 5% of your portfolio. You don't want to go too crazy, right? You don't want to take your whole portfolio and go to leaps, right? So not a lot of people that trade options is good away from hard shares or buying long-term investments. That's not why we use it. We use it as a way to acquire more long-term investments, in my personal opinion, right? So I didn't go 100% leaps. I still have hard shares and things that I want to own over a long period of time. Shout out to them. They call me Young Top T out here, but I digress. Time horizon. You match leaps expiration to your investment thesis timeline, right? So you got to look at your time horizon and risk management. I told you the great thing about leaps is your risks are defined. Your risks are defined. So understand that. That's why you take a little bit of capital, a small percentage of your overall portfolio, if you want to use this strategy, and you could buy leaps, but your risks are defined to whatever that small piece is. And the biggest part to me is this last one, number 5, right? You know, this is what I like to call Jim Low's hierarchy of needs right here, right? But number 5, right, is patience and discipline. Shout out to all my people that study psychology. Y'all got that bar right there. Patience and discipline. You want to stay committed to your thesis through market volatility. The thing about a leap is you are giving yourself more time. Do not panic. Do not panic if it moves against you right away. If you believe in your thesis, which is the key, that goes back to number 1, you know, on Jim Low's hierarchy of needs. You got to start with the research. If you've done your research and you know what you're talking about, the numbers make sense, then have the patience and discipline, right? Leaps are a powerful wealth building tool when used with discipline, research, and strategic thinking. They magnify returns when your thesis is correct, but require careful risk management to protect your capital. I bodied that sentence. Let me repeat that again. Leaps are a powerful wealth building tool when used with discipline, research, and strategic thinking. They magnify returns when your thesis is correct, but require careful risk management to protect your capital. Come on, I should win an award just for that one sentence, y'all. Stop.
That's the theme. No. But that theme, what you just said, is across all investments, no matter the asset class.
You know what? I think our next book, I'm going to start with that sentence because I'm very proud of myself if y'all can't tell. But I digress. All right, so here's what I'll say to do, right? Choose one company that you wouldn't mind investing in for the 2 to 3 years. Also, something I want to point out too, when you're running a call leap, which is what I told you, 99% of the time I'm running calls, it's something that you wouldn't mind owning if you had to own hard shares. It's something that you believe in, right? It's something that you believe in. So I want you guys just to pay attention, right? So to get started, here's what I'll say. Don't just jump into it. Look at a company that you want to own for, 2 to 3 years. Look at the leap, look at the stock, and then kind of like do a juxtaposition and see, how that works out for you. You know what I mean? So with that being said, that is what I have this morning for you guys as it pertains to leaps. Leaps are very powerful, but you gotta be strategic. Gotta be a strategic thinker, man. You gotta do the research, man. In the words of the God Fredro, man, you gotta do the knowledge, man. Gotta do the knowledge. You know what I mean? Anyway, man. Any more thoughts, Kamari, Corey? I want you brothers to weigh in. What are your thoughts? Any thoughts you guys got?
My thought is I agree 100%. Leaps are great. But like you said, most people should stick to hard shares. But if you want to do it, do the knowledge, as you said, do the knowledge.
Listen, I take it a step further. I don't think most people should even buy a hard share. I think most people should buy ETFs. That's personal. That's my personal opinion. That's my personal opinion.
I mean, your personal opinion generally lines up with whatever the data says, so I'm not opposed to that. Because when you're looking at leaps or you're looking at any kind of option, you need to be looking at the historic information along with what's going on, your fundamental analysis of what's going on in the current time, right? Yeah. Because your historical analysis will give you patterns, and your current events, like tell you which way the market is moving, so it'll help you with the timing. About.
Oh, Corey, you sound you in the water right now. Real quick. You sound you in the water right now, real quick. We come right back to you, bro. But real quick, though, I want to say this too. Right. If you guys in the chat, I just put the link right to get this book. Do not so again, this is not a sponsored joint, but I want to put this book out there. It's written by a gentleman by the name of Mike Wynn, who I think is actually just Nancy Pelosi's pen name. I keep telling you all that, but it's called Intrinsic. To me, this is the best book that I've ever read on just the leap strategy. Right? It's the best book I've read on the leap strategy, which is why I always talk about it. I'm not a co-author or anything like that, but I just think that, it's that good. It's that good when it comes to leaps. It really breaks down the science behind leaps, why you use leaps, how to use leaps, and it has a strategy, right? So, you know, this is the book Intrinsic. Now, I gotta wait for a pullback because now I want to buy me a SPY leap. I want to buy a SPY leap. So Don says this. Don says buy the S&P 500 and go earn more money and buy more. That's a strategy, right? You know,
I ain't mad at that.
Shout out to JL Collins, man. That's what we call the simple path to wealth, man. Just go buy the full market of S&P 500. Go enjoy life, get yams and party and have fun, and just go buy more S&P 500 and enjoy life, right? Rinse and repeat. Rinse and repeat. So, man, listen, that's my thesis on leaps. I do think leaps are powerful, right? But they're not built for everybody, but they can be used in a way to help you build significant wealth if you understand. But if you're going to get into this space, please do the knowledge, do the research, read the text. It's one of them joints where I talk about this book often because I wish I wrote it, right? I can't, when you read something like this, it's like, I can't do it any better. So, you know, it's already there. But I said I just say this, man. Be safe out there, man. Be strategic in all your investments, as Kamari said, not just leaps, but in everything you do. Be strategic. One part I want to add to that is be self-aware, right? Be self-aware. Know what kind of investor you are. Know what you're comfortable doing. Don't do things just because you see it on your timeline, right? If you're not built to be a landlord, don't be out here trying to be a landlord, right? So this is one example, but there's several other examples too, right? You know, don't fall for the shiny object syndrome. Figure out what you're good at, do that, double down, make money, invest, and, you know, go enjoy life, man. But that's what I got, man. That's what I got. Any comments or things that we need to respond to, beloved?
Katie says the market gives you whispers.
Yeah, man.
Prices as memory. Yes, they do. You'll see that in all the charts.
Jarrell's in the building. What up, Jarrell? So, Chestnut Jess, I really use 2 weeks out. It's a bit more cheaper than a whole year. I'm working my way up to be all right. So that's a great point, right? You know, sometimes because those do cost more, right? Let's not act like leaps don't cost more. They do cost more. 2 weeks out will cost you less, you know. So you can take your time and get to that. Go from 2 weeks to a month to 3 months to 6 months. But the goal, once you get to the top point where you can buy a year, by 2 years, now we cooking with fish grease. KG also says they love leaps. They love leaps. They up my alley. And options are right up my alley. Salute, salute, salute. I have a long-term investment that has been riding the long game for 18 to 19 years. Woo!
What up, KD?
Salute. That's dope. You said 18 to 19 years. That's what I'm talking about. I love when people talk about something they've been investing in for 18. Listen, I'm a student of Mr. Earls, man. So, you know what I mean? Like, I get that, man. You know, that's my OG, although I never met the man. But, you know, so I get that. 18 to 19 years is dope, though. You know what I'm saying? All right, let's get back to these comments, though. You see my name, Kamari, right?
Yep.
I'm a student of Mr. Earl, man. You know what I mean? We got to pay homage to Mr. Earl all the time. What up, though? April is a great example of this. Just pick a stock. Yeah, man.
For now.
The book link is in there, so that's the book right there. All right, man.
Well, markets don't always go up all the time, so be prepared when they pull back.
Yes, and like we talked about during the presentation, when they actually pull back, it might be a good time to then get into
the dip.
Yes. Always buy the dip. Well, I shouldn't say always buy the dip. That's bad to say, but because you don't want to catch a falling knife. But do the knowledge, man. Fredro Starr, do the knowledge, man. All right, man. So with that being said, if you're not a member of the village, please join the village, and you can do so by going to blackwealthrebels.com. A lot of information there. We got hundreds at this point. We have hundreds of videos. We got audio content. Everything is behind the village. If you are a member, if your kid goes to our camp, or maybe your kid doesn't go to our camp, people that are members of the village get access to the recordings of our camp. So there's also that for the youth, right? So our camp is also broadcast in our village as well. And we got special content specifically. Like, so again, our village is free to join, by the way. Now we do have a paid tier, you know what I'm saying? I'm not trying to sell you anything, but I got stuff for sale. But the paid tier gets access to a bunch more content. You know, you get to go behind a wall and hear some of Corey's real thoughts that will never make YouTube for for reasons. You know what I mean? Corey get to express himself behind the village. So, you know, make sure you know, if you are the paid tier, to take a look at all the content we got back there as well. Yeah, man. With that being said, I know Kamari has to get out of here, man. You know,
he got trees to cut.
He got trees to cut, which means that he's hired someone to cut a tree, and he's going to go sit over him. And
I'm paying
him.
For it. I'm cutting trees.
He's going to stand behind him like Master Reynolds.
My payments.
He's going to stand behind him like Master Reynolds. And, you know,
no, actually, I'm not. I'm going to take a picture and leave.
Oh, so you're going to get content? Is what you're doing?
Nah, but I got to do some other clean out stuff too. Yeah. I got all kinds of stuff to do, man.
I told you, man. I got a show at apartment, right? You know, I got a 2-bedroom, beautiful 2-bedroom too. I'm about to show that. I got that to show that at 1. I got a call with a village member at 12, and I also got to get one of my tenants who locked themselves out. So, you know, the life of a landlord.
By the way,
man.
Do you charge for that?
Fucking right, I do. It's my time.
Okay.
It's in the lease. Lose your key, and I got to bring you around the key. I need $50 for that.
You charge at rent time or a separate? When you do it
separate, you get an invoice. You're gonna get an invoice for this.
Gotcha.
You're gonna pay the invoice because listen, you don't lose the key. It's not a problem, right?
No. I see people that charge for it. I see some who don't. That's why I asked.
Listen, it's my time, dog. My time is valuable, man. Listen, you know we charge per hour for my time, for our time rather. This is a discount. It's a discount. You know what I'm saying? So it is what it is, though. You know.
All right, y'all. We get out of here. I gotta run.
I can go to my league fund. All right, y'all. Listen, we love y'all. Be safe. Wealthy Wednesdays, Freedom Fridays, Sunday Playbook,
and Saturday with the babies.
Saturday with the babies. That's right, y'all. We love y'all. Please stay safe out there. Any questions, comments, concerns? blackwealthrebels@gmail.com. All right, you know what I'm saying? So, boom. There we go. KG with some more bars.